I'm Judy Shaw for NYSE Floor Talk. Joining me today is Jason Su. He is the chairman and CIO of Rayliant. Jason, it's great to have you on the show. Thanks for joining me.
Judy, it's great to be here.
Wonderful. Okay, now quick note to our viewers. This interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Now, Jason, share a little bit about yourself, your work, and how your firm came to focus on investing in China.
Absolutely. Well, Judy, I actually started my career as a research academic. In fact, I today still teach at UCLA. Now, about China, I think the best advice I was given, really, it's this quote from Wayne Gretzky. Skate to where the puck will be, not where the puck is. And for me, China represents where the puck will be. It's an enormous economy. It is only a small fraction of the investor portfolio today, and it's only going to get larger. And it's still an economy that's very inefficient, so huge potential for alpha. Now, to put that in the context of my career, I began my career about 20 years ago, and most people know me for my work on smart beta fundamental indexing. And in fact, today, globally, there are probably about $40 billion of exchange traded ETF money that's indexed to the idea. And so I'm hoping to bring both that technology to China and, of course, the China investment theme to the world.
All right. Now, Jason, when you look at this year's performance for both the US and China, how do they compare and contrast?
Now, this has been a surprising year. We know we've been in a global pandemic lockdown, but for both US and China, it's been a very strong bull market. Now, in China, it's a bit different than the US, right? US, the rally has been with the tech names. It's the Amazon for home shopping. It's the Zoom for doing video conferencing. In China, it's a bit more thematic. You might be surprised. It's the leisure and travel that's been the big performer in China this year. And that's driven, of course, by policy tailwind to help out what is otherwise an battered sector. Also surprising is defense has been a very strong sector. And this is where China as a diversifier for US really makes sense, right? US and China has been having a bit of a trade skirmish there. And as a result, the defense sector has really rallied in China. And so when you have two superpowers, you're looking to diversify your portfolio, whenever there is sort of disagreement, you actually see sort of divergence in sector performance, and that leads to sort of interesting interplays when it comes to portfolio diversification.
Based on your research, what role does investor behavior play in your analysis, and what kind of data are you using?
Now, China is a market that is 90% retail traded. So when you want to study that market, not only is it important to understand the fundamentals of the companies you're looking at, it's equally important to understand the behavioral psychology, to really understand what the retail individuals are thinking, how they're trading. So we look at a lot of microstructured trade data to get a sense of, what trades being placed by retail individuals. We look at new account openings to get a sense of the retail flow into the market, margin utilization, retail buying into mutual funds. So these are data we look at to give us an edge and give us insight into the psychology of that market.
Recently, you co-authored a paper entitled, "Should You Have More China in Your Portfolio?" Tell me about this paper.
Well, first of all, this paper has been published, so you can find it on the Journal of Index Investing. Now, if you don't like to read a full-length paper, the Reader's Digest is actually on our website, www.rayliant.com. And indeed, we're going to do a webinar where I can walk you through the paper with my co-author, Dr. Phil Wool, on our webinar forthcoming. Now, the paper is really broken into two parts. It's about the thesis for beta and the thesis for alpha when it comes to China investing. So what do I mean by the thesis for beta? Well, China is a large growing market. If you want to buy young demographics, this is the place to buy. If you want to buy uncorrelatedness, China is only 0.3 correlation with the US. So as a portfolio diversifier, you get growth and you get risk reduction. So that's a phenomenally good deal. Now on the alpha part, as I mentioned before, China is 80 to 90% retail trading, which means there's a lot of room for alpha. And this is something you don't see in the US, right? US is 3% retail trading. So the chance that you're going to get alpha from someone is fairly low. Now in China, the chance that the average buyer of what you're selling is a less sophisticated individual. So your chance of earning excess return is quite high. And I think this is a situation that's likely to persist for probably at least the next decade, given how large that market is and how many new retail individuals are still coming to market for that market. So the conclusion of the paper, whether it's looking at the alpha, whether it's looking at the beta, China deserves a look in your portfolio.
Well, Jason, it's been great to talk with you. Thank you for joining me on NYSE Floor Talk.
Thank you, Judy. It's been a pleasure.